Got a bloody day here today for the second edition of Blockfuel Live powered by Stocktwits. So we have a very special guest, probably someone that everyone wants to hear from today, John Hoffman, who is managing director over at Grayscale. So John, we interviewed you a couple weeks ago, maybe a month ago now, on our podcast, but welcome to Stocktwits Live with Blockfuel.
Yeah, thanks for having me. Excited to be here. Great to see you, Jody and Avi, and to the Stocktwits community. Hello, and thanks for having me today.
Yeah, so I'll kick it over to Jody in just a second. But as I mentioned, you couldn't go on your computer at all today. You know, it felt like one of those black swan events, basically. But Bitcoin was like relatively resilient. The QQQs were down, I think 5.5% right at the close here, and Bitcoin finished a little bit under, but pretty flat for the most part. So, Jody, why don't you kick off the agenda for today?
Yeah, let's dive right in. What we're gonna see and kind of get into is we want to know post-tariff world, right? So, John, let's get a little background on you first. I think because the one thing that we really need right now is a little bit of long-term vision. And you're someone in Chicago, home of so much derivative trading historically, where you're speaking to institutions. And that's the kind of like calmness and wisdom that we're hoping, people in our audience are hoping to absorb some of that. But don't have to give us any promises on price prediction. But tell us a little bit about what your conversations have been like.
Yeah. So first of all, I love that introduction about taking a long-term perspective. And I think that, real wealth is created with that long-term investment perspective. And so, look, I started my career in the ETF industry many years ago, watched that industry grow from, $100 billion space to 10 trillion today, and made the pivot to crypto because as I looked at the innovation, I thought, this is one of the most significant, technological innovations of our generation. We're 16 years into this. And it's interesting to hear you talk about kind of like, it acted like a mature asset class today. I think a lot about the internet and how significant that innovation was. And, 15 years into the internet, 0.4% of the world was using the internet, right? Fast forward to today, 96% of, Americans are on the internet. So we're 16 years into this crypto, technology. And so on days like today, when we see volatility in the market, you're starting to see it, move to its adolescence period, right? It's no longer a new emerging thing. It is gaining momentum. You asked about kind of the adoption or the conversations that we're having in institutional markets. It's incredible to think back, 10 years ago when the common refrain in crypto was it's, used for terrorism and money laundering. And today we have a strategic Bitcoin reserve. We have a number of states that are building Bitcoin reserves. The largest institutions in the world are calling us day in and day out to talk about this asset class. So we've come a really long way, but yet we're still, at the very beginning of this journey to mass adoption.
Mm-hmm. Yeah, and we got to touch on the tariffs. So I know you guys are a public company, so share what you can share here. But like the broader vision of what we're seeing, I won't say the total collapse of the market, but it's getting those vibes where, if it ticks a little bit lower, it could really drop underneath us. As I mentioned, Bitcoin was relatively resilient compared to the rest of the market. But I guess people probably want to know, like, what is the impact on tariffs on the global, due to the tariffs? Sorry.
Yeah. So look, we saw a pretty, violent reaction today to this news. What I would say, and especially to the younger audience out there and folks that are starting to, build wealth and invest and accumulate and save, think about the long term. It's very easy to sit here and look at every line item and every print and every jobs report and every tariff news and think about the implications on the short term. If we zoom out, Bitcoin, I'll use as an asset class, is up over 50,000% over the last 11 years. It's a $3.8 trillion, market. If we look at crypto more broadly, there's no question in my mind that we are going to wake up on days where Bitcoin and crypto more broadly are going to be down, and sometimes significantly. And those present, great buying opportunities in the market. When we zoom out though, and we look at kind of the trajectory of growth, it's going up and to the right. So it's going to be bumpy. It's a new asset class. There's price discovery happening real time every minute of every day now. But as more and more investors come into this market, we're going to see volatility, decline in this asset class. So we used to be at a 90, we're trending towards a 50 in Bitcoin. I'd like to kind of think about this concept that the biggest risk, and I won't speak specifically to broader markets, but the biggest risk that I see in crypto today is actually behavioral risk. And what I mean by that is people waking up on days like this and selling and doing things for a short-term perspective. That's the biggest risk. If you can zoom out and think about, what's this going to look like in 2035, in 2045? That's when you take that perspective, days like this should actually get you excited because it presents an opportunity to add exposure to this asset class.
And when you guys, when you're having these conversations about adding exposure, what is a way that you guys are really like packaging that up? And I think what we've seen is, as we always talk about financial education, there's not enough at the U.S. and that's like I think a big part of like wealth gap is just not understanding, how to do this. And if you're trying to time the market with individual stock names, like most people aren't going to be able to do that well. Like it's a tough game to play. But as you're thinking about mitigating some of that risk with more diversified, portfolio, what are the conversations you're having? Like institutions, hey, add 3% of this, 10% of this, put this as part of like, a QQQ like package.
Yeah, so let me, I could kind of hit on that, riff on that for a second here. So first off, from a statistical perspective, if we look at like a traditional 60-40 portfolio, we published a report on the role of crypto in a portfolio. The quick, summary version is, we come out at between 3 and 5% exposure to Bitcoin, improves the overall risk-adjusted return of the portfolio and optimizes the Sharpe ratio of the portfolio. So adding Bitcoin to a portfolio, has historically improved the risk-adjusted return of the portfolio. Where should that come from? How should you think about this? Look, I think crypto, and I'll use Bitcoin, in specific, high volatility, still has, an asymmetric risk profile from, the risk to the upside is really the bigger risk here, right? That we go from $75,000, $80,000 to 150. So sizing this in a portfolio is important. And being able to, again, weather those periods of drawdown and continue to stay invested. From an institutional perspective, when you look at just the pure statistics around this asset class, again, this is the first new asset class humanity has seen in 165 years. But when you look at just the data points, low correlation, and people could say, yeah, but Bitcoin was down today and equities were down today. And it looks to be highly correlated. No, it still retains a low correlation over an extended period of time. There'll be periods where Bitcoin and equities move together, but what we still see is the maintenance of that diversification. And so a low correlated asset with high potential return is kind of the holy grail of things to add into a diversified portfolio. So we are increasingly seeing institutions, some of the largest in the world, start to add Bitcoin and crypto more broadly because they have long-term perspective, right? We look at some of the pension funds, endowments, foundations, family offices that can think in terms of 10, 20, 50, 80-year periods, and it's hard not to include this in a portfolio when you're looking at things through that lens. And, I would just say that I assume, a lot of the folks that tune in here are thinking about how to build portfolios. Keep it simple. We offer a product BTC, which is the lowest fee Bitcoin ETF. Add that to a portfolio, assuming it fits within your risk parameters, and keep that there for an extended period of time. And statistically, that has been a good thing to have in a portfolio.
Mm-hmm. Yeah, I know we got like thousands of people listening typically to these live, and so can you just simplify everything for folks that are thinking of ETFs as, like Jody mentioned, conglomerate of many different stocks? With this, it's just Bitcoin, right? So it's not the traditional ETF where you're seeing a lot of buckets. But how does that work? Just for some of the folks that are just getting into the space.
Yeah. So an ETF is just a wrapper for delivering investment returns. It's essentially, I like to think about it as a technology. It's a digital version of, kind of investing. It's point and click. Historically, to your point, the first ETF was comprised of stocks, market cap weighted S&P 500. Today, there's over 4,000 ETFs in the U.S. market. And we've really pushed the boundaries of what you can include in the ETF. So, today there's ETFs that hold, stocks, bonds, fixed income, real estate, commodities, currencies, really any liquid asset class that is permissible can be included in this. At Grayscale, we actually thought it was important to have Bitcoin ETFs because, Bitcoin is such an important asset class, and putting it in this incredibly efficient vehicle that is the ETF. It's such an efficient way to invest. We actually ended up suing the SEC and winning the lawsuit to push forward the Bitcoin ETFs. At the most simple level, it is a wrapper. We are holding Bitcoin in here. As $100 comes in, we are holding $100 of Bitcoin, dollar for dollar, like for like. And it's that, simple. It trades like a stock. So if you were to punch in ticker BTC, that's the Grayscale Bitcoin Trust. All it does is hold Bitcoin, but you can do it right from a brokerage account, in your traditional investment environment.
Mm-hmm. And Jody, before you hit spot versus futures here, you said something on the last call that we had that was like really eye-opening. People are aware of this, but not probably to the capacity which they should be, in terms of like the greatest transfer of wealth coming. And you think about Bitcoin, there are definitely institutions coming in, our more and more parents of listeners are probably buying some, but, as you mentioned on the last call, I don't want to butcher the numbers, but I think it was like $10 trillion or some 85 trillion. Can you touch on that a bit for the new listeners?
Yeah. Yeah. And I'll kind of voice over a little bit of that. Look, we live in a digital world. We've grown up, we've seen everything kind of digitized, from music to email. Everything we do now is digital. Money should be digital as well. We're seeing the digitization of money with Bitcoin and crypto, more broadly. What's super exciting is, again, at $3.7 trillion in crypto today, you think about the demographics that you just referenced here. There is $85 trillion of capital, of wealth, that is going to move from the baby boomers to Gen X, Gen Y, Gen Z, millennials over the next decade. As those generations inherit this capital, many of them are digitally native, right? They understand digital money, they trust digital money, and we continue to see a higher propensity of adoption, in those segments of the market. And that demographic is just, driven by the data of the wealth transfer that's going to occur here. I would also point out the flip side of that is what's super interesting is a lot of very, very high net worth individuals are actually in crypto today. So today, 52 million Americans are invested in crypto. We did a study with the Harris Poll, and we found a really interesting statistic around the high net worth and ultra high net worth category, that they were actually more likely to hold crypto than some of the lesser demographics, if you will, which kind of puts that on its face. But super interesting data around the transfer of wealth that is pending in this country, and the expectation that, we see this every day. They inherit the money and they look at, digital ways to invest.
Mm-hmm.
When you think about that directly, I think high net worth, right? We all want number to go up and adoption to happen, and we want capital to come in. It's hard teaching people how to do like a multi-sig or, you're doing a cold wallet. Are you seeing on this high net worth side, they already have, tax advantaged accounts, and they're putting in money and getting exposure just through those ETFs?
Absolutely. I mean, in qualified accounts, 401ks and IRAs, it's been a great place to have crypto exposure. Grayscale launched a Bitcoin fund in 2013. We saw, a lot of investors come through qualified accounts to access that return pattern, which was up over 50,000% in that 12-year period. So, look, I think that what is so incredibly so incredible today is you have this ETF wrapper, which is, the most efficient way to gain exposure to an asset class, now partnered with this Bitcoin technology, right? And so with the push of a button, I can get Bitcoin in my brokerage account, in my investment account. A lot of people ask me, what about holding physical token, right? And there's puts and takes with each of those. But I'm happy to expound on, why I think that doing this in an ETF for certain circumstances is the most efficient way to gain this exposure. And I would say it has never been easier and more efficient to add Bitcoin or Ethereum to a portfolio compared to what it was, even 2 and 3 years ago. And the end investor is the one that is accreting this great value. So what I mean by that is, when the ETFs came to market, Grayscale offers an ETF that is 15 basis points. That's 0.15% annual fee, and you have exposure to Bitcoin. That is the most efficient way to get exposure through an ETF wrapper in the world. You're not paying a spread, between the bid and the offer. You're not having to move money. Incredibly efficient mechanism.
And John, just to add on to that, we had Meanwhile on last Thursday, Zach Townsend. So they're basically doing these whole life insurance policies, completely denominated in Bitcoin. And the big takeaway was like, look, people lose their keys all the time. Family, your generational wealth is going to be a single generation if you lose it and no one can access it. So I think people, when we think about inheritance planning, need to be like, look, if you're going to pass some coin over, you need to make sure people can actually access it, use it, take custody of it, and like if you have a retirement account, you're going to name beneficiaries to it. So if I die, my son, is able to get hold of that. Switching topics a little bit, so futures ETFs were the first way to go, or the first product that was out, and then now we have spot ETFs. Could you help educate us a little bit on the difference between those? Like what was was it liquidity? Was it tightness on spreads? What was a benefit when we eventually went to the spot?
Yeah. And your point about that you made about wealth transfer and also the estate planning aspect, I didn't hit any of that. Happy to go back there and talk about why it makes sense in that structure, but good reminder. So an exchange traded fund, ultimately, the Securities and Exchange Commission looks at, kind of the approval process for these to come to market. The first iteration of these products came under the 1940 Act, and within the 40 Act, these funds could invest in futures. So, I think we got to start with what is a future, right? A future is just an agreement to, buy or sell a specific asset in the future at a predetermined price, right? It's a contract. And so there was a set of ETFs that launched first that invested in Bitcoin futures. So, thinking about the mechanics there, as money comes into the fund, cash comes into the fund, US dollars, the portfolio manager is buying treasuries, and then those treasuries are used to collateralize the purchase of these futures. And I realize this is probably a little bit nuanced here, but the point is futures, because again, it's a contract to buy something in the future, doesn't track the price perfectly on every single move, right? And so this first generation of product, the Bitcoin futures products, let's say I buy a July Bitcoin future. As July comes and that contract expires, I need to go out and buy the next contract. So maybe I'm going to buy now the August contract, or the October or the November. Then as that expires, I need to buy again. And these curves, these futures curves, have shapes to them where sometimes they're in what's called backwardization, and sometimes they're in contango. What this really means is sometimes I can buy more futures, sometimes I can buy less futures, depending on the shape of that curve. So there tends to be drag on the return. Holding the actual thing outright you don't have any of that drag. So as we got approval to bring the spot products, which again, think of it in the sense of gold, right? I could buy gold futures, or I could just hold gold bars, in the fund. If I hold gold bars in the fund, it's going to track the price of gold perfectly because I don't have any slippage on that because I hold the gold bars. It's the same situation here. So last year, the spot products were approved. And if you look back since we launched our Bitcoin fund relative to the futures, you're going to see a pretty big divergence in return. It doesn't mean that those funds aren't doing what they're supposed to do. It just means that the dynamics of rolling futures, eliminates some of that return. So, it's very important to understand the mechanics of these products. And again, the very simple version of just holding the spot commodity is a highly efficient way to gain exposure.
Mm-hmm. You mentioned Ethereum a few minutes ago. You guys also have an ETF in Ethereum. So I know there's been a lot of bears coming out on Ethereum of late, and if you're looking purely at price, sure, like it makes sense. What are you seeing from like the institutional side? Like, what are you having conversations around of like, same thesis kind of here with Bitcoin is like, hey, be patient, long tailed here. But would love to kind of hear what's the rumblings over at Grayscale are.
Yeah, it's fascinating in the sense that, when you think about how far this industry has come and this asset class has come, and then you start to get out and engage with investors, the spectrum of where they are on this is so incredibly varied, right? I might have covered this on the last show, but I almost draw a curve where 5% of financial professionals in the wealth management channel in the institutional segment have done the work, understand the technology, and are allocating. 90% are curious, interested, doing the work right now, and will probably be allocating. And then 5%, hasn't done the work or has done the work, doesn't believe in it, and is not going to allocate, right? When we get into the market, we find that a lot of this audience has heard of Bitcoin. Some of them understand it. Many of them are educating on this topic today, and an incredible amount are starting to allocate. When you bring Ethereum into the conversation, it drops off precipitously in this environment. So you think again about the progression here. Bitcoin is going to be the entry point, the gateway to discussions around Ethereum. As we talk to the more crypto native, portions of the world, there's a lot more, interest in Ethereum and smart contract technology and everything around the Ethereum blockchain. But on a mass basis, you can very quickly observe the difference, in kind of understanding of the difference between, even proof of work and proof of stake, and the difference in Ethereum and Bitcoin. Very, very early days on the ETH side.
Yeah. So jumping to a fun topic next, I think this is the alpha that I would tune in for specifically. Looking last night, I was going through different threads, and there's a fun product, which is the Yield Max product on strategy or MicroStrategy, MSTY. And so I hold MicroStrategy or strategy. It's a volatile stock for sure, but it's one that we're excited to follow and think there's a lot of upside, there long term. A different way to play it that has been, on crypto Twitter. There's big communities around that, like irresponsibly long MicroStrategy. A lot of debate around holding strategy itself or holding MSTY, which is where they're selling covered calls on MicroStrategy, and then they're having a yield component and income that's coming into your account, on like a monthly basis. You guys are getting into that game too. You know the product better than I do. I would love to hear about it, because I do think that, like, on a volatile asset like a Bitcoin, like a strategy, if it's going up, it's going to be choppy, and there's going to be a lot of income that can be made in the interim. There's also that lets you stack more Bitcoin along the way.
Yeah, it's very timely. We just launched yesterday 2 products in the options overwriting strategies. So ticker BTCC is the Grayscale Bitcoin covered call strategy, and I'll talk about that in a moment. And then ticker BPI, Bravo Papa India, that launched yesterday as well. That is a premium income ETF on Bitcoin. Before I get there, though, if you're looking to stack Bitcoin, as you kind of used as a terminology, you can buy things like BTC that invest directly in Bitcoin. You can buy MSTR as a way as well. One other thing I would just point out is something like GDLC, which is a fund that trades today. It is 90% Bitcoin and Ethereum. It also has Solana, AVAX, and XRP. And it's at a discount today. Today's 4/3/2025. It's trading less than its net asset value. So you're actually buying Bitcoin in that instance at 8, 9, 10% less than fair value in that example. And we have a public filing to uplist that to an exchange traded fund. Pending regulatory approval, you would expect that discount to collapse to NAV. So you can even buy Bitcoin there at less than net asset value. As it relates to income, we have a lot of investors that, are super interested in Bitcoin, but, are turned away from no dividend, no distribution, no yield. There's a lot of investors that also think about the volatility of the asset class and don't want to introduce something to a portfolio with the volatility. So BTCC is a fund, again, that we just launched that is essentially writing at the money call options on Bitcoin. It's going to make a monthly distribution. So it'll distribute income out, cash US dollar out as a dividend each month. And then BPI is a very similar strategy. The difference is kind of where it's writing the calls. So it's writing calls that are 15, 20% out of the money. So two different ways to kind of tailor your income as it relates to Bitcoin. And to your point, on an asset class that has very high volatility, options are essentially priced based on time premium, volatility. So you get paid, to sell that volatility. We're really excited about this product, just launched, and keep an eye out as it starts making distributions in the coming months. We expect that to be a very attractive allocation.
Just to clarify too, real quick, Liz, on something like that, the comparison would be if you're holding, you're holding the ETF itself, and you want to sell covered calls on the BTC ETF. You have to be like somewhat knowledgeable and good at executing on that strategy of making your own covered calls. Which, if you think about like the BTPI or BPI, that's going to be something that's like an actively managed fund where you guys are doing all the covered calls. You're basically picking out of the money options and figuring out what it's like a good risk reward ratio for the income amount you're looking for.
Yeah, look, I think everything in finance is about risk and return, and value for money. These are carry a relatively low management fee. And you can outsource, just as you described. You can hire this ETF to do the options overwrite strategy for you for 59 basis points a year, or you could do it yourself. That now the reality is doing it yourself. You've got to do all the work that you just talked about. Not to mention, you got to think about the institutional execution that a global asset manager, attains in the market relative to where you're executing, right? And so, we think that there's a reason why this strategy has been appealing in other structures. And again, we're excited to bring it now in Bitcoin as the leader in crypto asset management to the Bitcoin community as well.
Yeah, I used to call them beach stocks back in the day, right? I have different portfolios, and you're right. Like the ones that I don't touch, that stick around, that portfolio is doing a lot better when I try to day trade options, then jump on a meeting. Some news drops and I'm not there to sell it, so this is super exciting. I guess last question here to wrap things up. What do you see as like, we have a lot of tailwinds. Trump was in office. He was the first, pro crypto Bitcoin president here. We have some bills coming down the pipeline, but like, what are some like catalysts, I'd say, over the next, 6 months, a year, that people could keep an eye on, that could, impact the price overall?
Yeah. So there's just, it's hard to answer that with how much is currently in motion. Again, I'm going to zoom out. Like the idea that this is a global borderless asset class, And we talk about and we monitor the things that are happening here in the U.S. and we get excited about the developments around, the tailwinds that some of them of which you just talked about. And it's easy to forget that there's another 7 billion people around the world that are touching this asset class as well. And similar developments, in major markets around the world, all competing for the same very, very scarce resource. So what would I be monitoring, in the coming months? I wouldn't. I'd be monitoring things over the next decade, right? And when I think about, as I talked about, the institutional markets that are coming into this asset class, there's a $35 trillion wealth management intermediary market that is, actively diligencing the asset class and increasing availability. There's more and more people coming into this space for the same finite supply of crypto. So will this be a volatile space? Yes. Are there going to be days when it's down? Absolutely. But if you zoom out and you think about the long-term trajectory, this is a better technology, and better technology ultimately prevails.
You're on mute, Jodes.
With gold hitting all-time highs, I think it's a great thing to say that is that we're looking for the next Bitcoin all-time high soon. If we're kind of seeing that same store of value use case come in of like, okay, if people are moving to gold, give it 5 to 10 years, and that kind of demand, that shift, like flight to quality, will eventually be all to Bitcoin. But John, we appreciate you fighting the good fight with institutions for us, having those conversations, putting on the jacket every day and convincing them, hey, like these are all the reasons why. Go ahead and get ahead of the big inheritance shift. Is Bitcoin's the best technology out there. So John, we appreciate you joining us.
Thank you, Jody. Thank you, Avi. Great to see you again, and appreciated the discussion today. Thanks, guys.
Yep. Thanks.
Take care.